Today, clinical trials in the United Kingdom show a common drug can be repurposed to save the lives of COVID-19 patients, and scientists are calling it a major breakthrough. Also, airline traffic is creeping back pretty slowly, but the wealthy don't want to wait. And finally, how hidden biases affect investment decisions on Wall Street and end up costing investors money. I'm MacKenzie Sigalos, and this is CNBC After Hours. Let's take a look at how Wall Street did today. Stocks posted a win. All three indices finished in the green. One of the big reasons for today's rally is a significant development on the COVID-19 treatment front that scientists are calling a major breakthrough. A clinical trial in the UK showed that an affordable and commonly used steroid reduced deaths of COVID patients on ventilators by 33%. And there's another piece of finance news I want to point out here. Morgan Stanley's former top diversity executive has sued the investment bank for racial discrimination. The firm's former global diversity chief is alleging that despite several recent announcements about inclusion in the wake of worldwide demonstrations protesting racial injustice, the bank spent years blocking efforts to address inequalities. Morgan Stanley responded, telling CNBC that the firm, quote, strongly rejects the lawsuit's claims. But as the nation faces a reckoning on how to correct years of inequity and discrimination along racial and gender lines, so too must Wall Street. An implicit bias runs deep. A new study finds that inherent bias toward white money managers has sometimes prevented investors from selecting the highest performing funds and ended up costing them money by leaving returns on the table. CNBC's Leslie Picker dove into that study, and she has the details.
Well, there's a long way to go. Currently, of the $69 trillion in assets under management among hedge funds, private equity firms, venture capital funds, and mutual funds, only 1.3% is managed by women or people of color. It's not just a racism issue, but a fiduciary duty one as well. Asset allocators think endowments and sovereign wealth funds and pension funds may be missing out on returns by undervaluing high-performing Black fund managers and overvaluing those led by white men. That bias was discovered through a study by Stanford University and Illumin Capital. They found that at the highest level, allocators tended to give Black managers lower performance ratings than white managers of similar quality. The researchers say that the result of their study suggests that in addition to racial disparities in the pipeline for fund managers, there exists systemic racial disparities in how investors evaluate funds and allocate money. Darren Dodson, who helped conduct the research, says that organizations need to understand these biases and work to overcome them.
These groups of people are systematically locked out because of their race specifically. There's part of what we proved within our research. And unless there's a proactive strategy that is market driven and based to select the highest performing managers, which include these communities and these fund leaders, then nothing will change.
A failure of fiduciary duty means that if you are being paid to manage money for someone, it's your obligation to seek the highest return possible for that person. So what this study says is that if you are not choosing fund managers that would be able to achieve those highest returns simply based on race, then you are going against your fiduciary duty.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves today.
Broadly speaking, we certainly expect on a regional basis there to be flare-ups and hotspots of coronavirus still. We have in the U.S. on average still 20,000 cases on a daily basis, but we don't expect another shutdown of the entire U.S. economy.
We're going to need to see the underlying data and analyze it more closely. But this is a strong treatment effect coming out of a well-designed study.
I do think you'll want to continue support for workers in some form. I think there are going to be an awful lot of unemployed people for some time, even though Again, we have 25 million newly unemployed or partially employed people. And even if we start putting people back to work really fast, which may happen here, there's still going to be plenty of people who don't have jobs, and they may not have them for a while.
This is where we were, and this is where we are now in just a short 30 days. So of course, there's great retail sales right now. Look how far we've come. But the problem is we got to get all the way to here, which I think is at the end of 21. And it's going to take really the middle of 21. So you're talking about 2 years from now is how long it's going to take to get back to flat same-store sales when it comes to restaurants.
For our next story, we take to the skies. Airlines are getting more serious about passengers wearing masks on flights. Yesterday, Airlines for America, the industry's main lobbying group, released a statement threatening to ban customers who refuse to wear facial coverings from boarding a plane. Now, individual airlines will determine their own policies and consequences for passengers who do not comply, including possibly being added to a no-fly list. This statement comes as airlines begin adding more flights to their schedules and consumer appetite for flying starts to return. Now, this month, the Big Four, United, American, Delta, and Southwest, will boost their flight capacity by 27%, according to industry flight tracker OAG. So demand is picking up, but very slowly. This past weekend, about 980,000 people passed through TSA checkpoints around the country. Now, that is a lot higher than weekends in April and May, but it's still 405% lower than the same weekend last year. But while commercial air travel creeps back little by little, demand for private jets is soaring. For those who can afford it, private travel means no airport lines and no concerns about other passengers and their mask habits. CNBC's wealth editor Robert Frank has the details on this booming business.
One of the industries that is recovering fastest in this crisis is the private jet industry. We are seeing record numbers of new clients flying a private jet who have never flown on a private jet before. If you look at NetJets, if you look at Blade, if you look at these companies, their number of new clients is quadrupled, sometimes sixfold what it was. NetJets is seeing its best May since 2007 when it comes to new clients. Now, why is this? Well, it's all about health and wealth right now. If you look at the health side of it, of course, it's so great right now not to have to go to an airport, not to have to clear security, not to have to sit on a crowded plane with over 100 other people, some of whom may or may not be wearing masks. On a private jet, you can drive right up to the plane. The pilot will stay in the cockpit while you get on board. You can have the people around you who are your family, your friends. You can bring your own food, so you never have to interact with any crew or the pilots. And the wealth side of it is that flying private has never been cheaper. So just as an example, flying on a mid-sized jet from New York to Miami would normally cost around $20,000 for that plane. Right now, it's about $10,000. You can fit about 8 or 9 people on that flight. So you can fly in a private jet with your friends from New York to Florida for a little over $1,000 a seat right now. And so that's why so many new people, especially older flyers who have never flown private, are now flying private, and that is benefiting all these companies that until a few months ago were seeing huge declines. So the big question for the industry is how many of these new flyers will actually stay flying private once we get a vaccine or once prices go up again. And that's the big unknown. The companies tell me that once you've flown private, even if it costs a little bit more later, you never go back. And so we'll see if that's true.
Now for today's numbers round. We'll start with 18. Retail sales in May jumped nearly 18% from April, the biggest monthly increase on record. Now, the retail sales number is an economic indicator released monthly from the federal government, and it tracks sales for retail and food services. So today we learned that consumer spending shot up last month as many states began reopening and people started eating out more, buying items for their homes and gardens, and spending money on sporting goods. Now, the huge spike in retail sales was part of today's market story, driving investor confidence as stocks jumped higher. Next, 1200. Walmart struck a partnership with e-commerce company Shopify this week. which will lead to an expected 1,200 additional sellers on Walmart's marketplace through the end of the year. Shopify provides an online platform that sellers use to power a small e-commerce business. So what does each side get out of this deal? Well, 1,200 Shopify sellers will now have access to the 120 million customers who visit Walmart's marketplace every month. And for Walmart, well, it's a direct shot at Amazon, which has an army of third-party sellers. Marketplace is a, quote, strategic priority for Walmart, and it makes sense. By growing the marketplace, it allows Walmart to control the digital store, attracting millions of customers without having to develop and manufacture all the items sold there. Now, last quarter, Walmart's online sales grew a staggering 74%, and sales on its marketplace specifically outpaces the overall e-commerce business. And finally, $599. Samsung is launching a new phone this week, and it will be the cheapest 5G phone on the US market with a $599 price tag. The Galaxy A71 5G will be available on T-Mobile and Sprint starting Friday, and is made out of plastic instead of metal and glass. That's it for After Hours, but before we go, here's one more thing to keep an eye on. Today, CNBC revealed its annual Disruptor 50 list, the top private companies whose innovation and breakthroughs are changing the broader business landscape. To check out the full list, head to CNBC.com and download the CNBC app. We'll be right here at our home office every Tuesday and Thursday with a new edition of After Hours, so be sure to catch us then.